Hello student, this is Aniket Shukla and from today's class we will start our chapter 6 issue of shares. Now in our live class we have already understood the theoretical portion of this chapter, that what is a company, right? What is share and what are the various types of share, like what is equity share and what is preference share. From today's class we will see the numerical portion. Now from this chapter, issue of share, there can be two types of question. First type, where it will be asked you to pass general entries at the time of issue of share. Now the second thing that can be asked in the exam is how you can show the share capital in the balance sheet of the company. So in today's class, we will start that topic, presentation of share capital in the balance sheet. Now before understanding this topic, the first thing that we need to understand is what is share capital and how the balance sheet of a company looks like. Now what is share capital? Share capital is the capital raised by a company, right? And that is the capital raised by a company. How is it? That is the share, that is through share, right? By issuing shares. Okay, now what is share, that we have already understood. What is share? Share is the smallest part of the capital of the company. So what is share capital? Share capital is the capital raised by a company by issuing share. Now in case of partnership, if we are having two partners A and B, we can prepare separate partner capital account. But in case of a company, there can be thousands and lakhs of members. So it is not possible to prepare a separate capital account for each of the members. In that case, what company will do? Company will prepare a single account known as share capital. So I hope it is clear to you what is share capital. Now let's understand how the balance sheet of a company looks like. A partnership firm prepare its balance sheet in a horizontal form, means side by side. Firstly, they will write liabilities on the left side, then they will write assets on the right side. But in case of a company, balance sheet and profit and loss is prepared in vertical form. That means, firstly, they will write all the equity and liabilities. Then they will write the amount of all those liabilities, right? Then they will write the heading assets. And in that they will write all the assets. So the total of liability side will be equal to the total of asset side. Okay? So I hope this point is clear to you. Now what are the columns? Let's understand. So the first column is related to the particular column in which the company will write all the liabilities first, then all the assets. The second column is notes to accounts. Now what is notes to accounts? See, sometimes some topics need further explanation. So for example, on the asset side I have written debtors. But in a company or in any business, there can be so many debtors, like you have to receive from Ram, you have to receive from Mohan also. It can be possible that you have to receive from many people. So all those people are debtor for your business. Now it is not possible to write the name of all the debtor on the asset side. So what the company will do, they will prepare separate account for debtors. But what they will do, they will total the amount of all the debtors and they will write they will write here the amount of total debtors, right? And they will put a note number, let's suppose note number 5. Okay, so if you want to know in this total amount of debtor who are the person from whom you have to receive, so what you will do, sir? You will move to the you can say like a notes, which is known as notes to account, and in this notes to account data you can visit note number 5, which is debtor, and in this note there will be written that these person are our debtor and this much is the amount that we have to receive from these debtors. Okay, so this notes to account column you can say is a kind of explanation of the term in detail, right, which is necessary, right? Okay, the next column is amount of current year and amount of previous year. Now amount of current year is the only thing that we need for the particular year. But this previous year we write only for the comparison purpose, so that we can compare our assets and liability with previous year. So I hope the format of balance sheet in case of a company is clear to you. Now we have to understand how the share capital is shown in the balance sheet. The share capital will be shown on the equity and liability side. See, there are two main sides, or you can say main head. First one, equity and liability, and the second main head is assets. Now in every main head there are some major heads. Like in asset side there are two major heads. First one is non-current asset, which is fixed asset. Then second major head is current asset. Now in this non-current asset there will be so many non-current assets like building, plant, non-current investment, etc. And in current asset there will be stock, debtor, right, other things. Same way on the equity and liability side there are four major heads, and from those four major heads, the first major head is shareholder fund. In this major head, there are three subheads. First one, share capital. Second one is reserve and surplus. Okay, and there is third one, money received against share warrant. Okay. Now what we have to see? This is share capital is shown here. Means on the equity and liability side, in the major head shareholder fund, there is a subhead which is share capital. So here we will write the amount of share capital. I hope till here things are clear. Okay. Now I hope it is clear to you what is the pro forma balance sheet. There are some types of, or you can say the kind of share capital. So firstly, let's understand what are the various kinds of share capital. Okay, so the first type of share capital is the authorized capital. Authorized capital is that capital of a company with which the company gets itself registered, right? This is the capital which company has to mention in its memorandum of association at the time of registration. Now this is mere information, this is not the actual capital. That's why it is also known as nominal capital or registered capital. This is the capital with which company gets registered. Now let's suppose a company got registered with 5 lakh shares at the rate of 10 rupees each. It means that the company is having 50 lakh rupees of share capital, which is divided into 5 lakh shares of 10 rupees each. Now this is only the registered capital, that's not the actual capital. So from this capital, this authorized capital, now company needs some money. So company decided that they will issue. So company wants to issue, let me write it here. Company wants to issue, that is not actually issued. Company wants to issue. So let's suppose from this 5 lakh share, company decided that they will issue 1 lakh share. Okay, so they want to issue 1 lakh shares. So the number of shares which the company wants to issue, that is not actually issued. This company wants to issue. It is known as issued capital. So we can say that in this case, the issued capital of the company will be 1 lakh share multiplied by 10, that is 10. Now it is not necessary that whatever amount of share I want to sell you want to buy the same amount of share. Okay, there can be 3 situations. First one, company wants to issue 1 lakh and public wants to buy 1 lakh. That is known as full subscription. Second situation, when the company wants to issue 1 lakh but public wants to buy less than what company wants to issue. That is known as under subscription. Okay, so that is under subscribed, and this one is fully subscribed, you can say. Now there can be one third situation also. Company wants to issue 1 lakh but the public, let's suppose, wants to buy more than what company wants to issue. That is known as over subscription. Now if we talk about individual case, in this case, how much company will issue, sir? Company will issue 1 lakh because public wants 1 lakh and company also want to give 1 lakh. So how much company will give to the public? Same 1 lakh. Company wants to issue 1 lakh, but the public wants to buy only 80,000. So in this case, how much the maximum company can give is 80,000. Because the remaining 20, no one is there to buy that one, right? Okay. So in this case, company will allot 80,000 to the public, right? Okay. Then last is company wants to issue 1 lakh, but the public wants to buy 120. Now in this case, how much company will give to the public, sir? 1 lakh. Because company wants to issue 1 lakh, so it doesn't matter someone wants to buy more than that. The maximum company can give is 1 lakh. So I hope this point is clear to you. Okay. Now let's come to our topic, which was the types of capital. So from authorized capital, the amount of capital which the company wants to issue, which is not actually issued yet, is known as issued capital. Now from this issued capital, whatever public wants to buy is known as subscribed capital. Okay, right. Now in no case company can issue more than what company wants to issue, right? Means in case of oversubscription, the maximum that company will give is the what is issued capital, right? Okay. Now from this subscribed capital, whatever the amount company asks from public is known as called up capital. Let's suppose public subscribed for 1 lakh share at the rate of 10. So subscribed capital will be 10 lakh, right? Okay. Now from the subscribed capital, company don't want this 10 rupees all in one payment. Company decided that they will ask only 2 rupees at the present time. So the called up capital will be 1 lakh into 2 rupees means 2 lakh rupees. Now it is not necessary that all the person will pay to you whom you ask for money, right? So whatever the amount of capital paid by public from this called up capital is known as paid up capital. And I hope this point is clear to you that this is the actual capital which the company is having. So that's the capital that we have to show here in the balance sheet, which is paid up capital. But you have noticed one thing, that we have not reached paid up capital directly. Firstly we need authorized, then issued, then subscribed, then called up, then paid up. So there are some detailing. So in this case what we will do, we will write share capital here, we will put a note number 1, we will write here paid up capital, but for reaching that paid up capital, we need to prepare a notes to account. Okay, so what the thing that is important for us for the presentation of share capital in balance sheet is to understand how we can prepare notes to account of share capital. Because if we know how to prepare notes to account of share capital, all we have to do is to write the paid up capital from that notes to account to the balance sheet. Okay, right. So we will see in today's class what are the various possibilities of preparing notes to account of a company related to share capital. But before that, let's understand one more thing, that is related to issue condition. Now what is issue condition means? See, if you want to sell something, you can sell it at 3 situations. First one, the value of something is 10 rupees and you want to sell it for 10 rupees. That is known as selling something at par. At par means at the same price. Second thing, the MRP was 10 rupees, but you want to sell it for more than 10. It can be 12, it can be 15, it can be more than that value. So it is known as selling at premium. Okay. Third one, the price is 10 rupees, but you want it to sell less than the actual price. That is known as at discount. Now this MRP is known as the face value of any share. Okay. So the MRP in case of share is known as face value of share. And a company can issue a share either at par or at premium. A company cannot issue its share at discount. So this is the case that we don't need to study. Okay. we'll see how a company can issue share at par and how a company can issue share at premium. So I hope this point is clear to you. Now let's see how we can prepare notes to account of share capital. Okay, so you can see on the board I have prepared firstly the format of balance sheet in which I have written equity and liability, in which shareholder fund is the major head, where in share capital we have to write the paid up capital. But how we get that paid up capital from notes to account number 1. So here I have prepared the notes to account note number 1, which is share capital. First we will write all the details here, then whatever paid up capital we will get, we will post that here. Okay. Now we will understand how we can prepare notes to account of share capital with multiple cases or example. So let's see our question number 1. So question number 1 says Vikas Limited has an authorized capital of rupees 40 lakh divided into 4 lakh equity share of rupees 10 each. So what it is saying that there is a company Vikas Limited which is having an authorized capital of 40 lakh. So firstly what we will do in note number is we will write heading authorized capital, and here we will write the number of share which is authorized. So 4 lakh equity shares, right? And the price of share is 10 rupees and the rate of 10 rupees each. So the value will be 40 lakh. Now this is not the actual capital of the company, so you will put a double line. What does double line represent? It represents that this capital will not be part of the total of that amount column. Okay, right. After authorized capital, what we write, sir? We know that after authorized capital, the second capital is issued capital. And what is the capital from that registered capital which the company wants to issue? So let's see our question. So it is given here that out of these, the company invited application for 3 lakh equity share. So from this 4 lakh share, company wants to issue 3 lakh shares. So what will write? 3 lakh equity shares and the rate of 10 rupees each. Okay, right. So it will be 30 lakh. Now this is also not the actual capital of the company. This is the capital which company wants to issue, which is not actually issued. So we will put a double line after issued capital also. Now what is left? We are left with subscribed, called up and paid up. Now what we will do? We will write all the capital in the same column, which is subscribed capital. Okay, in the subscribed capital, we will write subscribed capital, called up capital and paid up capital also. Now how will we do that, sir? To see one thing, first we will make a rough work, and here we will write the number of shares subscribed by the public. Now we will segregate the subscribed capital into 2 parts. First one, subscribed and fully paid, and second one, subscribed but not fully paid. Now what subscribed and fully paid means? Subscribed and fully paid means, let's suppose the number of shares subscribed by public is 2,80,000. So, and the value of share is 10 rupees. So if the public paid the whole amount, this 2,80,000 share will be categorized in this category, subscribed and fully paid. But if let's suppose from this 10 rupees, public paid only 8 rupees. So this number of share on which only 8 rupees is paid will be categorized here in subscribed but not fully paid. So I hope this point is clear to you. So let's see in our question what is given related to the subscribed capital. So if you see on the question, it is written that public applied for 2,80,000 share and all the money was duly received. It means we want to issue 2 lakh to the public, but the public wants to buy only 280. So the maximum we can give to the public is 2,80,000 share. So now what we will do, we will write 2,80,000 shares here. Now it is written in the question that all the money was duly received, means the 10 rupees, the whole amount got received. So you can assume it that there is no categorization here in that part and every share will be written here. Okay, right. So whatever we got, the total subscribed capital, everything got categorized in subscribed and fully. Okay, so now what we will do, we will write here subscribed and fully paid up. Okay, and here in the column we will write what's up, we will write 2,80,000 shares, so we will write 2,80,000 equity shares at the rate of 10 rupees each. Now the amount will be 28 lakh. Now there is no categorization there in subscribed but not fully paid, so we don't need to write the heading and we don't need to write anything related to it. So everything is done. Now what we will do, we will total this column. So from here if you see there is a double line, so that means we don't need to total the upper side and the total will be 28 lakh only. Now you are knowing what is your paid up capital. That is the actual capital of the company. So you will do what? That is just a information, a kind of working note you can say, right? And we will write this 28 lakh here in the main balance sheet in the current year amount column. So if someone wants the reference of this 28 lakh, they can refer to note to accounts first, and in notes to account first they can find all the details related to this paid up capital. So I hope the first case of presentation of share capital in balance sheet is clear to you. Now there can be various other possibility as well. So for example, public subscribe for 2,80,000 shares, but 2,000 shareholder did not pay the whole amount. Okay, it can be possible. Then how will present? There can be more possibility also. Then let's suppose out of this 2,000, as people were not paying the money, company decided that they will cancel their ownership on 1,000 shares. So what will be the presentation? Okay. So we will see all these possibilities one by one. So let's see our case number 2. So continuing with the same example, question number 1 with some necessary modification, let's see what our case 2 says. So our case 2 says the same thing that we discussed related to authorized capital, that there was a company with 4 lakh equity share at the rate of 10 rupees each was an authorized capital, and from this authorized, company wants to issue, let's suppose same 3 lakh equity share at the rate of 10 rupees each. Because these are just mere information, it has nothing to do with the actual capital. So all you have to do is whatever authorized and issued capital given in the question, you simply have to write it, put a double line, because these will not be total, right? So all you have to do is just write authorized and issued. Whatever portion will change, that will change from here, from subscribed capital. So let's see in our case 2 what is the change. So for your easiness, for your understanding, we are keeping authorized and issued capital same for every case. Okay. So let's see what our case 2 says related to subscribed capital. So in case 2, it is written that public applied for 3 lakh share. One shareholder Ravi holding 1,000 shares did not pay the final call of 2 rupees. Okay. So what is written in the question that public applied for how much share? Public applied for 3 lakh. Okay. So on the subscribed working note we will write that public subscribed for 3 lakh. Okay. How much you want to issue, sir? 3 lakh. How much public wants to buy? Same 3 lakh. So this is the full subscription case, right? Okay. Now public wants to buy 3 lakh. No doubt, sir. This subscribe will be categorized into 2 parts. First one, subscribe and fully paid. Second one, subscribe but not fully paid. Okay, right. So let's firstly what you have to do, from this subscribe you will make the categorization of this part. Then whatever will be left, that will be written in subscribe and fully paid. I hope this thing is clear to you. Okay. So what is written here? that public applied for 3 lakh share. One shareholder, Ravi, holding 1000 share, did not pay the final call of 2 rupees. So I hope it is clear from this statement that from this total number of 3 lakh share, 1000 shares got not fully paid. So we can say that means that on 2,99,000 shares we received all the money and that is fully paid. Okay. Now let's see how we will make the presentation in this situation. But one more thing, it is given here that this 1000 share were held by Ravi and on this only 2 rupees was not paid. So we can say that 10 was asked, that was the total asked money, and on this 10,000 into 2 was not received, means we didn't receive 2,000. So what we received, sir? We received 8,000 only. Okay, so let's see how we will present it. So in subscribe capital, the first thing that we will write is subscribe and fully paid, and here we will write what, sir? We will write the number of share 299. Okay, so 2,99,000 equity shares at the rate of 10 rupees each. Okay, so this will be 29,90,000. Okay, right. Now what is left? Second part, subscribe but not fully paid. So in the same part, subscribe capital, now we will write subscribe but not fully paid. So how much share are there? So there are 1000 shares, so 1000 equity share at the rate of 10 rupees each. Okay, so this will be how much, sir? One moment. We will write it here 1000 share at the rate of 10 rupees. So it will be 10,000. We will write this in the inner column only, right? Then we will make minus calls in arrear. What is calls in arrear? Means this is the amount which we called, but that is in arrear, that is not paid by the public. So how much public not paid? 2,000. The amount we received was 8,000 only. Right? Okay. Now what we will do, sir? We will make the total. So this will be 29,98,000. So that is the final amount which we have to write here in the column of current year, 29,98,000. So I hope this case is clear to you that how we make the presentation in the balance sheet if some of the shareholder did not pay the whole money. Okay, right. Now let's see our case number 3. Okay, continuing with the same case number 2 with some necessary modification. Let's see what case number 3 says. So public applied for 3 lakh share. One shareholder holding 1000 share did not pay Ravi, that person is Ravi, did not pay the final call of 2 rupees. So till here everything was same. Okay, what it is saying? That public applied for 3 lakh share. So what we will do? We will write here 3 lakh in the subscribe. Okay, so what is saying? That one shareholder Ravi holding 1000 share did not pay the final cost. So if from this 3 lakh share 1000 of share have not paid up all money, so what we will do? We will write 1000 share here and the remaining share, that is 2,99,000, will be written here. Okay, right. Now on this share how much is not received? So final call of 2 rupees is outstanding. So on this share we can say 2 rupees is not paid. Okay. Now what further information or what the change here is that 400 share of Ravi forfeited. Now what is written here? 400 share forfeited by the company. Now what forfeited or forfeiture means? Forfeiture means the shares on which the company has cancelled the ownership. So if share is given to you, let's suppose you are the owner and you are the actual shareholder of that particular share, but you are continuously making the default. So what the company will do? Company will cancel your shareholdership, okay, and you will be no longer the shareholder of that particular share. And that process is known as forfeiting the share of the company. Okay. It is written that as Ravi was not paying this 2 rupees, so what company did? Company forfeited 400 share from this 1000 share. Now let's see how we make the presentation. If from those calls in earlier part, company make some forfeiture. Now what we have to do? First we will make the classification like subscribe and fully paid and subscribe but not fully paid. Now what you have to do? From the subscribe and fully paid, you have to split this subscribe and fully paid into two categories. First one, on which money is not received but that is not forfeited by the company. First one. Second one, money is not received but that is forfeited by the company. Okay. So from this 1000, company forfeited how much? Company forfeited 400 shares. So you classify 400 in another category known as share forfeiture account. So in share forfeiture account we are having 400 shares. So we can say that now subscribed but not fully paid, there is only 600 shares. Okay. Now let's see how we make the presentation. So presentation till subscribed but not fully paid is the same. Okay. What you will do? You will write here 600 shares there. So write here 600 equity share at the rate of 10. Okay, so this will be 6,000. Now we will do what? We will deduct calls in arrears. So how much calls in arrears was there? 2 rupees was not paid, so 600 multiplied by 2 will be 1200. And if 1200 is not paid on these shares, so we can say that the amount we received was 4800. Okay, right. Now I hope that things are clear to you. Now we are having one more category, that is share forfeiture account. So let's see how we will make the presentation of share forfeiture. So if you can see in subscribe capital we are having two things. First one, subscriber fully paid. Second one, subscriber not fully paid. Now there is one more thing that is known as share forfeiture account. Now how much amount we will write here, sir, in share forfeiture account? So in share forfeiture account, you will write the amount which you actually received from those shares. So on this 400 share, only 2 rupees was not paid. That means 8 rupees was received. So it will be 3200. Right? Okay. So how much we will write here, sir? We will write 3200 in the amount column. Okay, right. So I hope this point is also clear to you. Now we will make the total, and the total will be 29,98,000 for the total capital of the company. And that is the capital that we have write here. We have to write here in the balance sheet in the share capital subhead. Okay. So I hope this case is also clear to you. That was our case number 3. Now there can be one last case, that is case number 4. And what that case is, if from this forfeited share on which the company has cancelled the ownership, company has now reissued some of the shares. So let's see that case. So continuing with the same case number 3, let's suppose there is some extension part, and that is written as out of these forfeited share of 400, 300 were reissued. So what is saying in the question? That firstly there was 3 lakh shares subscribed by the public. Now this from this 3 lakh, 1000 shareholder have not paid all the money, so we have categorized 1000 here, and the remaining 229, right? 2,99,000 here is subscribed and fully paid, right? Okay. Now from this 1000 share, company decided to cancel the ownership, means to forfeit 400 share. So now we did what? We categorized 400 share in another account known as share forfeiture account. Okay. Now what is the difference in the case 4 is whatever number of share which company reissue from the share forfeiture, that will be categorized again in subscribed and fully paid. Okay. So it is written in the question that out of these forfeited share, 300 were reissued. So it means now in share forfeiture account we are having 100 share only, and this 300 will will be added here in subscribed and fully paid, and now the subscribed and fully paid share will be 2,99,300. Okay, right. And I hope the presentation of this is clear to you, because now it looks similar to case number 3. So let's see how we'll make the presentation. So we are having a subscribed capital 3 lakh, and from this subscribed and fully paid shares are 2,99,300. So what we will do, we will write in subscribed and fully paid as 2,99,300 equity shares at the rate of 10 rupees each, right? So this will be 29,93,000. Okay, right. Now it's subscribed but not fully paid. We are having 600 shares only. So right here 600 equity shares at the rate of 10. So this will be 6,000. But in this 6,000, 2 rupees was unpaid, right? So right here minus cost in areas, right? And this will be 600 into how much? 600 into 2, right? So this is 1,200 was not paid. So what is the actual amount that we received is 4,800, right? Okay, this is also done. Lastly, we are having share for future account. So right here share for future account, and in this share for future account, we have to write that amount which is already received on this share. So 2 rupees was unpaid out of 10. So we can say 8 rupees is actually paid. So on this 100, 8 rupees was paid. So how much it will be? 100 into 8 means 800. Okay. So I hope presentation of this final case is also clear to you. Now let's total this column and let's see how much paid up capital we get. So the total of paid up capital will be 29,98,600. That is the actual paid up capital which we have to write here, okay, as share capital. Okay, and we will write here note number 1. So I hope all the cases related to balance sheet presentation is clear to you. That is the all possibility that can be there at the time of presentation of share capital in the balance sheet. Now there are 2 to 3 questions related to this particular concept in your book. That is, I guess, question number 1, 2 and 3. So solve those questions, and if you face any problem in understanding any particular topic or concept related to this, then you can ask me. Okay. So that's it for today's video. This is Ayush Shukla signing off.